Another week down, another portfolio update for all of you who are looking to keep up to speed with every investment move that I make here on the channel. Now, before I get into it today, I just want to share with you outright that I have only become more and more confident in my less is more approach to investing. And if you're tracking my portfolio, you're going to notice that I only really just keep climbing to higher highs. But don't just take my word for it. Let's pop open Gitcoin, what I'm currently using to track my portfolio, so you can see it all firsthand. Now, notice we actually started off the week with a bit of a rougher start as economic reports were coming out, leaving a lot of investors on the edge of their seats. But when the news was favorable to us all, my portfolio jumped to almost $240,000+ before we had a producer price index come out, causing the market, along with my portfolio, to slide. Now, ultimately, I'm sitting on $237,191. But investors, we aren't here for the instant gratification, nor am I trying to just get rich by Tuesday. This is all for my future. So with decades worth of time to be invested, I am only doubling down on my core positions and, of course, following through on my strategy to continue to trim my portfolio down to just 7 to 10 holdings. And speaking of which, this past week, I was really able to take full advantage of a lower stock share price with one of my stocks in focus, while also actually shaving down a position within my Roth IRA. All of that I want to cover, but of course, I first want to just jump right back into Gitcoin and actually run you through what my portfolio looks like as of right now. So here we go. We're going to see this overview in terms of individual stock positions that continue to dominate my portfolio, working out to just over 47% of my portfolio, whereas ETFs now make up roughly 45% of my portfolio. And here is where a very noticeable difference or change has been made for all of you who have actually been following along on my journey. Last week, this cash position was well over $26,000 and now just under $17,000, meaning I spent a fair chunk of change this past week, as I said I would do when opportunities come about. But more on that in just a moment. If we click into the sector breakdown, I want you to notice that I actually notched up here by about 2%, thus adding to my tech sector allocation, totaling out to over 53% of my portfolio. From there, we jump into the healthcare sector, which now totals over 12% of my portfolio and really balances out that risk factor, if you will, from all the tech. Next, I get into the consumer discretionary sector, coming in right now at over 10% of my portfolio. Then we get into other, which I'm going to skip over, before we're going to discover that I have industrial holdings coming in at 4.9% of my portfolio, financials coming in at just over 3% of my portfolio, and then we have real estate here that plays a minuscule role at 2.8% of my portfolio before tapping into consumer staples at 2.3% of my portfolio, as well as the energy, utilities, and material sectors, all less than 2% of my portfolio. But let's take a bit of a deeper dive here and take a look at my positions. Here we're actually going to see that, well, if you pay attention to all my videos, I still have this massive chunk here invested in, of course, the S&P 500, as that remains my foundation, risk-proofing my entire portfolio as it's the largest position here, totaling over $55,000 worth of my portfolio. And then I have layer 2 of that foundation, which is more growth-oriented with the Vanguard Technology Fund, ticker symbol VGT. Truly a great fund for young investors who don't really want to try their odds at picking tech winners. However, this ETF totals out to just over $33,000 worth of my portfolio. And now I get into individual stocks on top of that foundation I've been building, with Apple as the largest individual holding, which I'm really doubtful will ever change. Currently, it's coming in at almost $30,000 worth of my portfolio. Apple is then followed by Alphabet, which was a position that I scaled this past year to now over $25,000, as you can see. And now I hope you remember my portfolio from just the other week, because United Health certainly was not my 5th largest position, but now it's coming in at over $20,000 worth of my portfolio. So I will cover this one in a bit more detail in a hot second, but following United Health, I still have the entire stock market here with Vanguard's Total Stock Fund, ticker symbol VTI. Again, not sure how long this one is going to be here as I continue to consolidate. And now we have the cash position coming in at over $16,000, but again, I'm going to replenish this one to over $20,000 very soon. But then we have Tesla here coming in at 3.7% of my portfolio. That's followed by Visa at 3.3% of my portfolio, as well as another non-dividend payer here, Amazon, totaling 2.7% of my portfolio. Then we have everyone's favorite monthly paying company, Realty Income, which is actually on the sell list, but bear in mind that this one I'm actually waiting to sell for interest rates to come back down. I then get into Lockheed Martin, which I would really like to scale in 2025, but all dependent on geopolitics and the news because wars actually feed this dividend beast. And then I have McDonald's and the ever now so small position of Coca-Cola. Now, jumping back on with all of you, I quickly want to run through in a little bit more detail what exactly I was up to this past week because I made a lot of investment moves. Now, I want to start with the position that I trimmed down, which was Coca-Cola. Now, I already hear most of you out there, tried and true dividend investors, probably gasping for air, but hear me out when it comes to Coca-Cola. I keep harping on the investor profile idea, and Coca-Cola doesn't really fit my profile. That is not to say it's not a phenomenal company or ideal for you, but for me, it's not going to work anymore. I trimmed the position down from what I was sitting on within my Roth IRA, as well to forgo the tax implications, but ultimately I sold 18 shares worth of Coca-Cola, which put over $1,129 back into my pocket to reallocate. However, I did immediately reallocate that capital into one particular stock that has been directly impacted by recent current events, United Health. Now, as I am sure you know, the other week, a United Health executive, Brian Thompson, was brutally gunned down by a parasite of a very sick individual on the company's investor day in Manhattan. Really, before I go any further, I do want to take just a quick moment to extend my sincere condolences to the Thompson family. It is absolutely wrong to kill anyone. And the morning I heard the news, my heart really sank for the family. Either way, I was already scaling my position with United Health, and I only took advantage now of all the news breaking, and the stock has just been plummeting rather recently. So naturally, because I've been loading up on more shares, it was just time to double down on the position. But I want to give you my rationale here as to why I'm such a United Health bull. Do I think the company will be in the scrutiny spotlight for some time longer? Yes. And likewise, actually, with the entire industry as a whole when it comes to claim denials, which is what a lot of bears out there are worried about as public attention is now drawn to this matter. However, revenue for the company itself was actually up by 9%, reaching over $100 billion in the third quarter. The company saw 2 million new commercial customers and fulfilled over 1.6 billion prescriptions through Optum. What is more, well, the company is expected to boost EPS growth to 13% from 8%, and overall United Health remains financially healthy with influxes of revenue and income right down to that exceptionally clean balance sheet, which is always what I love to see. So remaining long on United Health for its dividend growth and just overall growth, I scored 17 more shares for a total of $9,464, almost $10,000 on just one position. And I can tell you, as the stock continues to fall, if it does, I'm only just getting started. However, I also doubled down on some more tech with Vanguard Tech ETF as well this past week, which is just hand in hand with my strategy to dollar cost average into VOO or VGT, totaling out to $1,263. Again, just consistent with my strategy. I recommend each and every one of you does something along those lines of just dollar cost averaging every week. Now, those were my moves. I spent nearly $10,000 this past week, which is insane to think about, but also why I actually keep such a large cash position to use when opportunities present themselves. Either way, investors, I want to know what exactly you've been up to this past week, so let me know down there in the comments, and I'm especially eager to understand your thoughts on United Health as well. Are you bullish or bearish on the stock? Comment away. Tune in right here to uncover one of the most perhaps uncomfortable truths about dividend investing you can even come to think of. Subscribe, and until the next one, I'll see you all in the next video.